Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. India's largest company by market capitalization, Reliance Industries, operating profit falls the most in 4 years due to weak GRMs and weak petrochemical business. HDFC Bank's third quarter profit met analyst estimates due to higher other income. The lender's asset quality sees a marginal deterioration sequentially. HCL Technologies raises its FY20 revenue guidance after its net profit and margins beat estimates in the third quarter, and the 50th edition of the World Economic Forum's annual summit is essentially taking place as we speak. It's starting today. And finally, we also have Tata Consultancy Services, the country's largest information technology firm, sees its margins rebound from a 9-quarter low, aided by a weak currency and other cost efficiencies. Let's talk about the US markets now. In fact, they had another record close on a Friday, and sentiment was aided by positive economic data and strong corporate earning. Benchmark indices posted their biggest weekly gain in percentage terms since August last year. Renita Young of Bloomberg News wraps up Friday's Wall Street action in this report.
U.S. stocks closed out Friday's session at record highs yet again, all happening on positive data from the United States and China and easing trade tensions. And we still are in the middle of corporate earnings season. One of the latest companies to report, Schlumberger, reporting fourth quarter adjusted earnings per share that beat analyst estimates. State Street rising during the session as its fourth quarter return on average equity also beat analyst estimates. Other companies to report next week include Netflix, United Airlines, and IBM. And in other news, the Gap is no longer pursuing a separation of Old Navy. Meanwhile, U.S. housing starts surged last month in December to their highest in 13 years, and palladium climbed to yet another record high, and gold was also a little bit higher, which signaled that there may still be some sort of nervousness in markets. That's a look at your Wall Street action on Friday. In New York, I'm Renita Young for Bloomberg News.
All right, let's take a closer look at the Asia-Pacific region now in terms of how their markets are faring. Sophie Kamruddin is joining us live from the Bloomberg studios in Hong Kong. Looks like another positive start, Sophie, at the start of this week. Good morning.
Good morning. Asian stocks are mixed but mostly higher, with the Kospi leading those gains as Samsung hits a fresh high in Seoul following the appointment of a new head for its smartphone division. And Japanese stocks are being led marginally higher by electronic makers and telcos, while the yen is holding near an 8-month low ahead of the BOJ's policy decision, which is due on Tuesday. Now, over in Sydney, we do have shares set to cap a 5th day of gains, while there are signs of overheating for the Australian stock rally. And ahead of the Lunar New Year holiday for Chinese markets, the Shanghai Composite opening 0.1% higher, while the offshore yuan staying on the front foot after an 8-week advance for the currency. And the Hang Seng is climbing at a May high, with Chinese telcos among the best performers on the 5G outlook. And a quick word on the latest update from the PBOC. The loan prime rates for both the 1-year and the 5-year were held steady at today's decision. And a quick word now on oil. Brent and WTI rising about 1%, pairing the earlier jump, though, as markets assess the temporary supply disruption for key OPEC producers, Libya and Iraq. Back to you.
Thanks so much for that, Sophie. All right, let's talk about the unrest that has returned to Hong Kong after a rally on Sunday at the Central Business District, which turned violent, which resulted in injuries to 4 policemen as they looked to disperse the crowd. Stephen Engel of Bloomberg News brings you the latest.
More of the same, even though there was a bit of a lull, of course, which led people into a false sense of security that things might be, improving. It came back with a roar again yesterday. There was an approved by the police gathering here in Chater Garden for yesterday. However, as the afternoon wore on, the police started ordering people to disperse, to go home, make your way to the MTR and leave because some outliers kind of went beyond the approved protest zone, if you want to call it that, and there was some violence. Some police officers were injured. At least 4 police officers were injured. A few protesters also injured. There was tear gas fired by the police to disperse the violent elements to the protest. Also late yesterday, we're hearing from the police that at least 4 petrol bombs were thrown at the Tai Po police station, which is far off in the New Territories. We're here in central Hong Kong, the center of the Central Business District, which was the epicenter of the incident yesterday. But basically, the organizers called this rally to bring back global attention to the plight of Hong Kong after what they felt was sidelined a little bit because of the lull, but also because of the Taiwan election, as well as the developments in Iran. And they wanted to put it back on the front pages of global newspapers.
So with the rallies continuing, any signs of progress on those demands by protesters?
No, not at all. It'll be interesting because we talk about how Hong Kong is, the protesters want this back on the front page as well. Carrie Lam is heading to Davos for the World Economic Forum, where she, of course, will likely send a message that Hong Kong is trying to get back to regular business. However, the protesters want to keep her feet to the fire on their main demands. At the crux of that is the pursuit of universal suffrage for Hong Kong citizens to choose their chief executive. Well, the government put out a lengthy statement again late yesterday saying the atmosphere, the political atmosphere right now is not right. It's not harmonious, and there is no mutual trust right now. So that is not conducive to implementing basic reforms to the basic law here, the mini constitution, which promises the ultimate aim, the ultimate goal is universal suffrage. But given this climate right now, the government put out that lengthy statement saying now's not the time.
Now, during the update on the Asian market, Sophie brought you an update on the oil market as well. She pointed out that oil prices are higher on account of supply disruptions and political instability in Libya and also in Iraq. James Thornhill of Bloomberg News gets you the latest.
But once it's not US and Iran tensions that are driving these, it's tensions in other parts of the region, Libya and Iraq, as you mentioned. Yeah, I mean, it's possible that this could be a fleeting impact. It's probably a little bit too early to say. What's happened is that this Libyan commander called Haftar has blocked oil exports from the ports he controls. And that's really a show of strength ahead of a big meeting coming up in Germany to sort of try and broker a truce in the civil war that's been raging in Libya for quite some time now. And whether that will have the desired effect for Commander Haftar remains to be seen, and in fact some commentators are saying it could backfire on him if it gets the backup of the Germans who are trying to broker this deal. But in the short term, it's taken 800,000 barrels of production from Libya out of the market, and that's had quite a sharp impact on prices this morning. We've seen prices spike up about as much as 2%. So I think going forward, a lot is going to depend on how that meeting goes later on in the week in Germany.
But this, of course, adding to the fact that we are seeing those Iraqi protests continue. So how significant is their output to the broader picture, and how much could this affect how long this rally could continue?
Sure, yeah, it's important to point out that we also have these disruptions in Iraq, which have taken out one oil field and potentially another one also, and Iraq's a pretty major producer. And of course, in the background, there's also ongoing doubts about Iraq's compliance with the OPEC production cuts. So all this plays into a positive supply dynamic for the market. On the flip side of that, I would caution that what we've seen in recent weeks is US crude inventory showing quite considerable builds, and that's been weighing on the price, and expectations are that trend will continue. So if we get another strong rise in US crude inventories this week, that could sap some of the strength out of this rally. But in the meantime, the market will be focused on the protests in Iraq, and if those escalate, could add to upside pressure.
All right, let's now look at what else is making headlines across the globe. Selina Wang of Bloomberg News brings you the first word headlines.
Rival factions in Libya's simmering civil war have held initial talks in Berlin as production at the country's biggest oil field was hit by damage to a major pipeline. The National Oil Corporation says output will be just over 70,000 barrels a day, down from more than 1 million a day just last Saturday. Bloomberg data shows that's Libya's lowest oil production level since August 2011. China says the new SARS-like virus that's killed at least 3 people and sickened dozens more is still preventable and controllable. Health authorities in the central city of Wuhan confirmed 136 new cases of the coronavirus over the weekend, taking the total above 200. The source of the virus is unknown. Authorities are seeking to reassure the public as hundreds of millions prepare to travel ahead of the Lunar New Year holiday. The Taal volcano in the Philippines continues to vent smoke and ash a week after a simmering eruption that's displaced thousands of local people. The level of activity seems to be falling, but seismologists say the drying of Taal's crater lake and the continuing earthquakes indicate that magma is rising in the volcano and that a devastating explosion could be days or hours away. The year's first tennis major starts later Monday in Australia, and play may be halted by air pollution from the worst bushfires in decades. Organizers at the Melbourne Open are monitoring air quality continuously after qualifying matches were delayed last week and some players collapsed with breathing problems. Tennis Australia has an air quality scale of 1 to 5 and says games will be halted if measurements reach level 4. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Selena Wang, and this is Bloomberg.
All right, turn back to India now, and let's get started let's get ready for trade, and that's going to take some doing. Darshan Mehta is joining me to help you do that. Darshan, it's going to take some doing because a lot of heavyweights announcing results and a lot to digest. How is that going to play a part?
Yeah, so 25% of the Nifty weight will reported numbers after market hours. So there's Reliance, TCS, there is HCL Tech and HDFC Bank. So all of them reported numbers. So they will probably react. The SGX Nifty currently is giving a positive outlook, which means that some of them probably did well in trade. So let's take a look at how our markets, SGX Nifty has reacted. It's up almost 27 points at this point of time. So indicating a slight positive opening for our Qs. How did we end up in trade? So Friday was rather muted. Again, we are seeing that the broader markets are continue to outperform the benchmark indices. So while the Nifty was flat in trade, the mid cap and the small cap end of the market did manage to outperform. The bank Nifty somehow has not been firing because the Nifty Bank was down 0.8%. The Nifty PSU Bank was down almost 0.6%. And HDFC Bank is important, which came in with numbers which are in line, and asset quality probably was a bit of a concern. So that probably will weigh on the bank Nifty today. ADRs, HDFC Bank, Tata Motors ended marginally positive. Profit booking in ICICI Bank as well as Vedanta was seen. What did well was Wipro, and Dr. Reddy is obviously reacting to the news that to the stock here. In India it was up 3%, so Dr. Reddy's was up 3% in the US markets. What happened with the flows? FIs bought in 260 crores, DIs were net sellers to the tune of 500 crores. In the cash market. Overall, what helped the Nifty and what didn't help the Nifty? If you're looking at the contribution, the Nifty was down 3 points, and basically the banks and the financial institution, HDFC Twins and ICICI Bank and Bharti Infratel reacting to the negative telecom news that came in. Reliance ended up almost 36 points contributed 36 points to the Nifty, Bharti Airtel, and that was on account of the telecom moves, and Dr. Reddy's managed to move up in trade. So that was how the Nifty ended up in trade. How did the F&O market end up in trade? That's something that we need to watch out for. Open interest build up of 1.6%. Some bit of fresh shorts were seen on the market. The Nifty Bank has been rather weak, so there was long unwinding that continued on the Nifty. Now, where are positions being taken? You can clearly see at this point of time that at higher levels, the call writers are active. 12,400 and 12,500 is where they're active, and from 12,300 to lower levels, it's the put writers which are much more active. If you're looking at what happened in trade on Friday, again, the call writers were active at 12,400, 500, which gives an indication that the resistance will coming in at this 12,400 level is very, very high, and if that is broken and if that is taken out with speed, the markets could definitely rally. Now, because of this move, the PCR probably came out. The VIX was flat in trade. The Nifty was flat in trade. Let's take a look at the PCR. The PCR, yes, as you pointed out, the call writers were active, so came down to 1.45 from 1.51. Stock specific, which were the stocks that reacted positively and saw high open interest build up. Torrent Pharma at 52-week high, fresh buying was seen. Vodafone Idea was down 25%. Bharti Airtel reacted to the Supreme Court verdict that came out. Indian Oil and SBI saw fresh shorts that were taken on themselves. Now, in terms of stocks which saw open interest decline, you had Tata Global which saw open interest build up of 10%. So long unwinding was seen. Short covering was seen in Bharat Electronics. Again, you're seeing a bit of short covering that was seen in Castrol, Apollo Tyres and Tata Chemicals.
Thanks so much for that, Darshan. All right, let's turn to the big boy, Reliance Industries. Earnings, as Darshan pointed out, an unexpected drop in refining margins and a weak petrochemical business hurt Reliance Industries in the December quarter. Profit generated by the core business fell even as the retail arm shone. Somit Sarkar is joining in to tell you all about the fine print. Somit, overall, what are the key numbers telling you?
Good morning, Alex. Overall, if you see, the numbers were weak compared to last quarter on a standalone basis. The revenues were down nearly 1%. The EBITDA declined by nearly 6% compared to last quarter, which is the biggest drop in over 4 years. EBITDA margin came in lower at 14.9%, while the net profit was down nearly 1.2% to close to 9,585 crore rupees. The gross refining margin, that's the key number for Reliance Industries, came down 2% to close to $9.2 per barrel. Now, operationally, the numbers were below estimates due to weaker petrochemical performance, but the net profit was aided by higher other income, lower tax rate and lower employee cost. If you see the other income, that was up nearly 9%, while tax as a percentage of profit before tax stood at close to 18.5% versus 20.8% reported by the company last quarter. Employee cost was also down nearly 21% compared to last quarter. Now, if you see the segment-wise performance, petrochemical business, that was the weakest, but revenues were down nearly 4%. EBIT declined by nearly 22.7%, which is the biggest drop in at least the last 17 quarters. And the numbers were weak due to a sharp decline in products present. This is despite the fact that the volume numbers were flat for Reliance Industries compared to last quarter. On the refining segment, the refining performance was in line with analyst estimates. The revenues were up 7%, EBIT was up 14%, and the numbers were aided by higher volumes, which were up nearly 8.4% compared to last quarter to close to 18.1 million metric tons. On the consolidated side, if you see the retail business, the revenues were up 27%, EBIT was up 58%. This is despite the economic slowdown that we have been seeing in the industry, but also the number was ahead of the analyst estimates, and this is the highest ever EBIT number reported by the company. And if you see the debt number of the company, now the consolidated debt was higher by nearly 5% to close to 3,06,800 crore rupees, but the company's cash balance also jumped up by nearly 14%, thereby keeping its net debt under check. The capital expenditure incurred by the company, the consolidated capital expenditure incurred by the company during the quarter was close to 14,000 crore, which is the lowest in the last 8 quarters, in line with what the company's statement has been, that they have been declining the capital expenditure going forward.
Now, Somit, there's also Reliance Jio, which reported numbers, and there's higher revenue per user on an average, but the slowing subscriber addition limited the telecom operators' growth in the December quarter, right?
Well, exactly what you said, Alex. If you see for Reliance Jio compared to last quarter, the numbers were an operational mess. The revenues were up nearly 6%. EBITDA was up 8.6%. Margins came in marginally higher at 40%. Net profit was up 36%, but that was because the company adopted the lower tax rate. Adjusted ARPU, if you see, now this is adjusted for the interconnect usage revenues that the company has earned, that was up only 0.7% to close to 128.4 crore rupees. As I said, net profit was aided by lower tax rate. The tax as a percentage of profit before tax stood at close to 19.4% as against 35% last quarter. The EBITDA, that was aided by lower employee cost which was down nearly 15% compared to last quarter. Now, tariff hikes and IUC recharges aided the growth. Now, subscriber addition for the company was the slowest in since it started reporting its numbers. Now, it added only 1.48 crore subscribers in the third quarter of financial year 2020. Because of this lower subscriber addition, the total data consumption and the total voice traffic on its network also grew the slowest since it started reporting its numbers. And in this quarter, the company also reported an exceptional loss of nearly 177 crore rupees related to the AGR dues.
All right, thanks so much for that, Somit. Let's turn to the banking space now. HDFC Bank continued to report strong profit growth in the December quarter, but its net interest income clocked the slowest growth in at least 7 quarters. Shefali Malik is standing by with the key numbers. Well, the profit number must have ticked by like clockwork, but what else are you picking up, Shefali? Good morning.
Good morning, Alex. So numbers were largely in line with the expectations, but there were a few hits and few misses. So starting with the basic numbers, NII grew 12.7%, profit jumped by about 33%, and pre-provisioning operating profits, that went up by 20%. So the factors that went behind the earnings, net interest income, like you mentioned, was slightly on the weaker side, slowest pace of growth in at least 7 quarters, and that was mainly on the back of lower yielding assets and also on the back of the bank deciding to maintain higher liquidity this this time around. The other income was a big supporting factor. Like last time, that is the second quarter, other income was a major booster, went up by 36%, and the main factors were a couple of things worked for them. The fee income was higher, treasury gains were higher, and one-off recoveries were also there, which boosted the other income. Apart from that, asset quality deteriorated slightly. The gross NPAs went up to 1.42% versus 1.38%. Net NPAs went up to 0.48% versus 0.42% on a sequential basis. And the major one of the disappointments in the earning was the slippages, which came in excess of 5,000 crores versus 3,700 crores on a sequential basis. So that was a little higher than the expectations. And the provisioning also went up. Because of that, it was up 12.7%. And despite this higher provisioning, the provisioning coverage ratio was lower this time. So that was one key notable factor. Advances growth, that was already reported by the bank, went up 20%. Deposits growth 25%. And within the advances growth, the important factor to note was that it was mainly on the back of higher corporate lending book, which grew at a much faster pace. There were a lot of expectations that retail will be a big booster this time, considering the festive season. However, barring a few unsecured buckets, the retail growth was a bit sluggish. It was about 14%. Margins remained largely stable. In HDB Financial, the profit grew by 16.5% on a YOY basis. AUMs clocked a growth of 15%.
All right, thanks so much for that, Shefali. Now, India's largest IT company, Tata Consultancy Services, reported its third quarter numbers also on Friday. While its profitability met street expectations, its margins rebounded from a 9-quarter low in the second quarter. Weakness in the rupee and other cost initiatives were instrumental in the margin expansion. Sajid Mangat spoke to the management of the company at their results conference, and here's what they had to say.
Overall growth, as you said, last year we did 11.5%, 11.4. We are not going to be anywhere near that. If we do better than 8, I'll be quite happy. But it is somewhere in that range. There's no taking away from it because the 2 quarters have been whatever they are. So that's, I think, that's not, the range of possibilities is not very wide there. But we are more optimistic about what comes after that. We'll have to wait and see how this quarter also plays out. But for the structural reasons that I told you, I think that we should be in a better position as we go forward into the next year. But early days yet to start and try to quantify that. BFSI.
Yeah. See, as I said, BFSI, the significant opportunities. Payments and wealth I already talked about. People continue to invest in core systems transformation, and then people are looking at opportunities like setting up a completely crypto bank. Those kind of opportunities are coming. Rajesh also mentioned about large growth and transformation programs in retail. Walgreens is in case in point. Likewise, we see opportunities in insurance as well as in banking. The policy administration systems, now the core transformations purely from closed books, we're also seeing opportunities. And we are seeing customers moving open books into a similar model. So overall, from my perspective, as far as BFSI is concerned, there are no pains, only gains.
Yeah, I think you talked about levers, and Rajesh talked about it. In fact, one of the things is definitely where over the years we have been investing in building the skills, especially around many of the new technologies, and that has reached a very fairly matured level. So there is an opportunity to expand the base. So if you look at it as a pyramid, to expand the base and to do that. So that will definitely have the benefit as we go along in terms of how we drive our costs as well. Apart from that, of course, we will continue to focus on many of the efficiency measures, and in fact, in the current quarter itself, if you look at many of the line items, that is very clearly reflected. Utilization is already at a fairly very high level, but we will continue to focus on that. And lastly, we've always said that growth as well as currency, these are other factors which will. So we continue to stay focused, and we will do that.
HCL Technologies was the other IT major to have reported earnings on Friday. While net profit and margins beat analyst estimates, the bigger takeaway was the fact that the company has raised its FY20 revenue growth guidance to 16.5 to 17% from the earlier 15 to 17%. And the company has also raised its margin guidance to 19 to 19.5% from the earlier 18.5 to 19.5%. Nishant Sharma caught up with the management of HCL Tech to understand the factors governing the rise in the guidance and the road ahead. Listen in.
It's been a great quarter. I'm sure you've seen the numbers, and we hit a $10 billion annualized run rate, right. which is a pride moment for all HCLites, and it's really been a great journey over the last few years. If you look at our organic growth, it continues to be close to double-digit organic growth, and overall growth is 2.1% from a quarter-on-quarter perspective and 16.4% year-on-year.
Right, and the IBM deal are fully on the books now. Yes. So how are the synergies panning out in terms of clients?
So this is really the second quarter of our software business, and we're so happy that it is really scaled up. Right, we've added 4,600 customers in the last 6 months, and in all kind of geographies: Japan, Latin America, Brazil, all over the world. And there are more than 25 customers with greater than $1 million revenue. And overall, it has contributed close to 300 plus million in this quarter. Mm-hmm. So it's a very strong performance. We're very happy with the real progress that we've made, and this also validates our strategy. If you look at a couple of years back, we started investing in IP partnerships, and we also did a big acquisition. Now this quarter is a very strong proof point of what this business can deliver, both in terms of momentum and profitability.
Right, and how are you able to bring new clients through products now?
Yeah, we have a 400 plus people sales team across the world. They're dedicated to be selling products, and then they continue to look at all the opportunities to add customers, and we have added quite a number of new clients for the software products as well.
Right, and you're able to cross-sell more services as well. And
the cross-sell and upsell is, there is a huge opportunity, but the first 2 quarters, or even for the first 4 quarters, this team is going to be more focused on onboarding all the clients. And gradually we will build the momentum on upsell and cross-sell.
Right, and Pratik, can you give me quantify the factors that really aided an expansion of the margin as well?
Yeah, so margins were impacted by 2 large things. Number one is the productivity generated in our IT and business services segment, which is close to 70% of our business. And the second thing was, the HCL software, the P&P segment, that segment has 33% EBIT compared to normal 18, 19 odd percent in the other 2 segments, 18 to 20%. So that differential, when HCL software grows, when P&P segment grows, that mix impact also gives us a 20-25 basis points additional. And the productivity that I spoke about also gave us something like 50-60 basis points. Right. And that helped us negate the negative impact of 60 basis points due to normal annual salary increments and so on and so forth. So productivity offsets the increments, and the 20 basis points, 25 basis points coming from the software mix gave us the improvement from 20 to 20.2.
On to earnings coming out today. The Nifty major that's reporting its results today is Kotak Mahindra Bank, and the lender's asset quality is likely to remain stable while provisions are likely to rise on a sequential basis. Shefali Malik is back to tell you all about the street expectations. Shefali?
Well, for Kotak Mahindra Bank on a standalone basis, we are looking forward to a net interest income growth of 17% to about 3,437 crores. Pre-provisioning operating profits are expected to grow 34% to 2,589 crores. Profit is expected to clock a growth of 30% on a YOY basis to 1,671 crores. And among the factors that are expected to go behind these earnings, so as per the management's guidance to grow a bit cautiously, the loan growth is expected to be rather more modest at just about 14% versus 15% growth that we had in the second quarter and about 23.5% in the same quarter last year. Deposit growth expected to be around 14% versus 18% on a year-on-year basis and 13% growth that they had in the second quarter. Pre-provisioning operating profits are expected to be stronger, and the management is expected to use some of that to make higher provisioning in this quarter. Margins expected to remain flattish at 4.6%, but those are one of the highest margins in the industry. Asset quality is expected to remain stable with gross NPAs of 2.3%, and the liability focus of the bank should mean higher CASA ratio. Remember, they also have one of the highest savings account rate that they offer, and the management's guidance on growth will be one of the key things to look forward to, and also how they are planning to grow in the unsecured book. Apart from that, obviously any word on the succession planning will be keenly apart from that, we may also look forward to how the non-lending subsidiaries may do this quarter, because there has been a lot of focus on the insurance subsidiaries, and some of them may actually do better this time around.
All right, thanks so much for that, Shefali. On to some of the stocks, apart from the ones that we've spoken about. Of course, Darshan pointed out 25% of the Nifty. Somit Sarkar is telling you all about the stocks in news. Somit, what else do you have for us?
Well, I'll start off with the earnings that came in post-market. Firstly, ICICI Lombard General Insurance. The results were weak. Improvement in profitability in the health segment was dragged by the motor segment. The reported reduction in loss ratio in most segments due to better business mix. L&T Technology Services, the results were weak. Telecom and high-tech verticals continue to drag the profits compared to last quarter. Management mentioned that the soft budgets and longer sales cycle impacted both these verticals, and the guidance for financial year 2020 is at 10% and was maintained, which implies only more than 2.5% Q-on-Q growth for the fourth quarter. Also, the management was optimistic on growth prospects driven by momentum on large deal wins and healthy pipeline. L&T Finance Holdings, the results were weak AUM growth of 5% compared to last year. Disbursements continued its downward momentum. Net interest margins and fees dipped sequentially, while the net profit declined sequentially on the back of higher provisioning. Asset quality remains flat sequentially, as the gross NPAs were at 5.94% and the net NPAs were at around 2.67%. In other stocks to watch, firstly, Lupin. US FDA has completed its inspection of its Vizag API facility with nearly 483 observations. Charlotte Hotels, because they've signed a share purchase agreement for the purchase of Bellary Hotels Private Limited for an enterprise value of nearly 290 crore rupees. Indostar Capital Finance, on the back of a Bloomberg news which says that the Everstone Capital is exploring options for the companies, including a partial stake sale as it looks to fund its expansion. GHCL, because the board will consider buyback of its shares on Jan 23rd. Quick Hill Technologies, because the tribunal has set aside a service tax demand of nearly 56 crore rupees, so that's a positive news coming in for the stock. And lastly, Godavari Power, because Chhattisgarh Environment Conservation Board has granted its consent to operate rolling mill and iron ore beneficiation plant for the company, and both these facilities are presently under commissioning and operations will start in the current quarter. This is the fourth quarter of financial year 2020.
Thanks so much for that, Somit. Now, it goes without saying that all the earnings that we spoke about and all, in fact, the corporate news you'll find on the website BloombergQuint.com. Let me take you through a couple of other pieces that you'll find. The issue of interim dividend may come up for discussion in the next Reserve Bank of India board meet as the government struggles to meet its ambitious fiscal deficit target of 3.3% amid apparent revenue shortfall. That's a PTI report that quoted unnamed sources. The board meeting would effectively take place before the end of the financial year, but after the presentation of the budget for next year by the finance minister. And in international news, of course, the World Economic Forum's annual meeting in the Swiss town of Davos kicks off today. If you're interested in what the world's richest and most powerful have to say about the problems facing the rest of society and also the world economy, well, you'll find all of that right here on BloombergQuint.com. That's all you need to know going into trade today, but do stay tuned. Clearly lots to talk about, and you'll find all of that again right here on BloombergQuint.com.